euro gaps sharply lower as the week opens on news that deposit tax is included as part of the Cyprus bailout deal. Eurozone leaders in Cyprus agreed over the weekend that in order to be eligible for an international bailout, the island country will need to raise up to 5.8 billion euros through taxing deposits. That includes up to 6.7% on deposit amounts below 100,000 and 9.9% on deposits above that. Understandably, there were reported scenes of Cypriots lining up at ATMs across the country. The move raised concerns that Eurozone leaders are willing to risk market disruption and even to an extreme banking collapse to avoid sovereign default. Markets are concerned that the news would unease depositors in other peripheral countries, meanwhile triggering fund flows to countries with lower risk, like Germany, or even out of the Eurozone altogether. The Cypriot Parliament will vote on the tax proposal today, and there is still a risk that it could be rejected. In short, the situation is chaos. Meanwhile, the Aussie is also weighed down as Treasurer Swan said that the country is facing a massive hit to government revenue. Swan also warned that this will inevitably continue to impact beyond the current year. Swan is worried that the government does not put growth and jobs in the economy at risk by cutting deeper and further in the near term to fill a hole in revenues. Based on figures released last week, Australia's deficit for the first 4 weeks of 2013 rose to 4.6 billion Australian dollars and took the total shortfall for the fiscal year to 26.8 billion. It recorded a $44 billion deficit last fiscal year. Latest CFTC data showed a sharp deterioration in yen positions on March 12th compared to the prior week. Indeed, speculators were clearly building up short positions again, and the position is threatening to surpass last year's largest net shorts of 94,400. Meanwhile, positions in sterling and Canadian dollar continue to deteriorate too. Euro position stabilized a bit, with net shorts reduced slightly to 2,700 from 26,100. Yen net shorts jumped sharply to 93,800, just an inch from last December's 94,400. Sterling positions continued to deteriorate, with net shorts jumping to 49,800 from 43,800. That's the eighth straight week of deterioration. Canadian dollar positions deteriorated slightly to 53,400 net shorts from 46,700. That's also the eighth straight week of deterioration. Aussie net longs rose back to 23,300 from 7,000, but that's still way off January's high of 97,000. US PPI and unemployment claims are the major market movers, along with that Cypriot vote later on in the day. For all the latest Forex news affecting the markets, join us at forexcurrencytradingonline.co.uk.